If you already have a permanent life insurance policy, meaning whole life, universal life, flexible premium paying life, variable indexed ULs, those all have cash value. You can do what is called a 1035. And what that is you just move cash value from one policy to another. Typically, you only see this done if it is not in a good policy. If we're going to 1035 a policy, that cash value is going to get moved and we're going to lose the other policy. It cancels the existing policy when you 1035. That means we've lost death benefit that we bought when we were younger and possibly healthier. If we move it, we do not gain as much death benefit as what we gave up. We lost death benefit. But let's just use as an example that maybe we have a $500,000 death benefit, but when we 1035 it, that 1035 money goes to reduced paid up additions. Those buy death benefit. So let's say that only buys $100,000 of death benefit. We are giving up $400,000 of death benefit. Is that justifiable? Does that make sense? In addition, that money, yes, we can get it in the policy in a lump sum for 1035ing. But what if we took an in-force illustration with the current company and looked at what the compounding and the interest is going to be on that policy versus if we put it in a new policy, what is that going to earn? Just by putting it in one time, not the lifetime of adding extra premium. We have to try to compare apples to apples. We have to also look at and justify, is that a good option to 1035? Is it a good option to give up the death benefit? What if this person passes away in the next 5 years and we just lost $400,000 of death benefit? Myself as the agent, it is my job to show you the numbers and to talk to you about what is infinite banking. If we have an old traditional whole life policy, all the money goes to death benefit on that policy, but long term, that policy is going to be equally as good and is going to have equally as much cash value. Why would we start over with all the capitalization of that policy? The first few years of a policy, you have to capitalize. Every single new policy has to be capitalized. Well, do we want to do that over and over and over and over? If we've already done it, and it's going to take about 5 to 7 years to capitalize a traditional whole life policy, why would we stop funding it right then? Right when it actually starts to take off and do us some good? Why would we stop putting money into it just to start another policy? Let's say that you have real estate and you have the perfect Airbnb. It is making you a ton of money, but somebody said that one next door can actually be better. So you sell this one to go buy that one. Why wouldn't you just have both? When I see agents that tell a client that they should 1035 a good whole life policy, that to me means we're just trying to make commission. So there are reasons that we can do 1035s, and there are reasons we shouldn't do 1035s, and there are reasons a 1035 should be alarming to you as a client.